I don't ever know what the bull case is. I figure that the bull case just takes care of itself. It's the bear case that I'm most interested in, because that's how you live or die. You live or die on the bear case, and then the other side is kind of luck.
Do you think that's what separates growth from value investors? Like growth investors are looking at the bull case more, and value investors more look at the downside?
That's a fair criticism of value guys too, that we're not sufficiently thinking about the things that could go right and only thinking about things that could go wrong. But the growth guys, they're in this position now where what they were doing in 2015 was they were buying very cheap call options, and many of them were cash flowing compounders that you weren't paying anything for, really. You weren't paying at all for the opportunity. And then when the opportunity came, they've had this enormous run, and they're looking back now and saying that's what these things do, not realizing that the valuation was part of the reason why they've had such a spectacular run to this point. You really don't want to be paying too much for those call options. And if I look around now for the cheap call options, I see all the cheap call options in deep value land. I think there's stuff that you just shouldn't be paying 1 or 2 times for these businesses. It doesn't reflect the true value. I don't know what they're worth. They might only be worth 4 times, but at 1 or 2 times, they're too cheap. I think we'll go through a fundamental type cycle now. This is it. If I look back and I look at what market cycles look like, they tend to be this sort of, you have this techie, growthy, it doesn't have to be tech, it tends to be tech.
Sure.
Because they're more exciting, more interesting business, and that's an upside type run. And then you have a more fundamental run. So 2000 to 2007, that was fundamentals. That was like a golden age of private equity. Everybody wanted to be a private equity associate when they came out of business school. And venture capital and tech was really uncool, cringy through that period of time. And then it reversed. You didn't want to be a fundamental guy. That was really cringy. I suspect we're about to go into a market where tech gets really cringy. And if you're an investor, like, you want to be looking at the cringy stuff. That's where you want to be. Perversely, what we're going to go into is a period of time where it might be good to be a tech investor, but we're not there yet. It needs to get... When you're buying this stuff, you should be embarrassed. That's how you know that you're buying the right stuff, when you don't want to tell anybody about what you own. Don't mention any of the names in the portfolio.